Hello, everyone. I'm Shannon Clancy, Great Falls Apex Director at the Great Falls Development Alliance. I'd like to thank you all for joining us for today's session on understanding your entity structure to be successful in government contracting. And I can't seem to get my slides to move forward, so I apologize for that.
We promise everybody she had them going just a minute ago.
I did. So the Great Falls Apex is hosted by the Great Falls Development Alliance, also known as GFDA. And to take a deeper dive into their free business services, visit their website. And don't forget to sign up for GFDA's Top 10, where you can find out about the latest projects and regional economic news that could lead to your next opportunity. As Apex advisors, we provide confidential, timely advice that can help you strategically position your business for success in the government marketplace. Explore our website to delve into our services, access the latest information on training events and networking opportunities provided by Montana Apex. So we offer a wide range of free services and resources that will help you prepare for the government market. And don't miss the Take Action Beyond SAM virtual series, where you will discover how the federal government and the state of Montana purchase products and services just like yours. There are 6 locations and 9 advisors across the state ready to help you achieve your government contracting goals. And you can connect with our Apex team by clicking the link that will be provided in the slides today. Today's session is being recorded. Please put your name and the company you're with in the chat to ensure you receive a copy of the slide deck and recording, which will be emailed to all attendees within 3 to 5 business days. And if you have any questions, please enter them into the chat as well, and they will be answered at the end of the presentation. So it's my pleasure to introduce our esteemed guest, Rich Gannon, Montana SBDC Business Advisor with the Great Falls Development Alliance. And today, Rich will be sharing valuable information on entity structures that are crucial in government contracting. Having a clear entity structure provides the framework for businesses to operate within the parameters set forth by government agencies, including eligibility for set-aside SBA certifications, such as woman-owned small business, service-disabled veteran-owned small business, the 8A program, and Hub Zone. So with that said, I will hand it over to Rich.
Great. I share my screen. Can you see my screen?
I can see your screen, Rich.
Okay, great. Okay, so everybody, feel free to unmute yourself if I'm going too fast, or if you have a question. I'm going to make this as kind of informal and conversational as possible. So as Shannon said, my name is Rich Gannon. I'm a small business advisor with Great Falls Development Alliance and the Montana Small Business Development Center. And if you don't know what the Montana Small Business Development Center is, today is your lucky day, because I'm going to tell you about them for about 3 seconds here. So we are a statewide network of small business advisors. We offer no-cost business advising and support. So a lot of what we do is working with entrepreneurs and business owners on things like business plans, financial projections, market research, and we offer some very basic background on things like legal entity structure. So that's a link there to connect with the Small Business Development Center. There's one in your neighborhood, maybe not right next door, but there's about 10 centers throughout the state. And I think there's about 15 or 16 advisors. So start off first with this great, big, huge, giant disclaimer I should have put in like 72 font. Everybody say it with me. Rich is not an accountant or an attorney. So I do not offer qualified legal or accounting advice. So please, 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 when you're consider forming a legal entity, you should consult an accountant or attorney, because everybody's situation is different and there's variables that are unique to you, and you want to have, an actual lawyer and accountant make sure what you're doing is correct legal, and all of that stuff. So again, raise your hand, repeat after me. Rich is not an accountant or attorney. Okay, there you go. Thank you, Carolyn. I saw that. So why does entity structure matter? Well, I think the biggest thing when it comes to legal entity structure has to do with your liability exposure. How much of what you own on the personal side is going to be exposed on the business side. So I think that's the primary, from my standpoint, that's probably one of the primary things when it comes to setting up a business legal entity. It also has impact on how you are going to be taxed. And it definitely affects operational control, and it can also influence how your business might be funded. And then it also certainly aligns with your business goals and growth plans. So, you know, if your goal is to start a business and take it to the public stock exchange, you probably don't want to be a sole proprietor, right? So that type of stuff really does matter when it comes to it. So let's take a look at first thing here, and I'm not going to call it a legal entity because it is not. A sole proprietorship is not a business legal entity. It is the simplest and maybe most common form of small business ownership out there, but it is not a legal entity. So if you're operating as a sole proprietorship, there's nothing wrong with that, but there's no legal distinction between you, the person, and your assets in the business and the business activities in the business assets. So you have unlimited personal liability for the business debt and obligation. You know, a pro to the sole proprietorship is you can just go out and say you're in business and pretty much wham bam, you're in business as a sole proprietor. You know, you walk out the door and you grab your lawnmower and you start mowing your neighbor's lawns and you call yourself Rich's Lawn Care Service. I'm operating as a sole proprietor. However, if my lawnmower starts on fire backyard and that burns their house down, my neighbor will probably be coming after my personal assets to make that up, right? So no, there is no legal liability separation with a sole proprietorship. Tax situation is not a separate taxing entity either. So profits are just flow through to the owner's personal income tax. Now let's take a look at partnerships. So partnerships obviously are going to be two or more people who agree on profits or losses and manage a business. There's three types of partnership. The general partnership, this is where there's equal responsibility between partners and each one has unlimited liability. There's a limited partnership, and typically a limited partnership will have one general partner who has probably the lion's share of the responsibility and also the liability for the business. And then there could be one or more limiters who have a limited amount of liability in that company. And then there's a third type of partnership, and that's called a limited liability partnership, an LLP. And this offers protection for all of the partners on the liability side. You'll see LLPs a lot with professional organizations like accountants, attorneys, architecture firms, where there's individuals that are all part of the business, but they all again have that liability separate from each one of their partners. So that's a really common form in that type of business. Profits and losses are just passed through on the individual tax return, so very similar to the sole proprietorship. Partnerships are not separate taxing entities. So what type of paperwork does a partnership require? Well, you need to write a formal partnership agreement that spells out, among other things, what each partner will do, how you're going to share profits and losses, and then here's an important one, ownership percentages. These things are important, and Shannon will probably tell you when it comes to qualifying for things like women-owned business or minority-owned business for some of these SBA certifications. The other thing your partnership agreement should really cover, and I've heard this called the Ds, those really uncomfortable things that can happen with partnerships. So what happens when one partner dies, one partner gets a divorce, one partner becomes disinterested, one partner starts using drugs, right? So all of these things that can go wrong, address them before they happen with a really solid written partnership agreement. I have a link here on how to write a partnership agreement, but again, when it comes to partnership, please have an attorney review a partnership agreement. There's horror stories out there of, you know, two people creating a partnership, but they didn't address perhaps divorce. One partner gets a divorce. Now the ex-husband is now a partner in this business, and the other partner really didn't want to be in business with the ex-husband, right? So those are the types of things a partnership agreement will cover. And then you also do need a statement of partnership authority. This is a little bit more detailed on individual partners within it, addresses, who's authorized to do what, percentage ownerships as well. Let's now take a look at a limited liability company, LLC. This is what I typically see as the most common form when someone is, maybe making a transition from a sole proprietorship. They want to hire a few employees, or maybe someone's just starting out and they don't want to operate as a sole proprietorship. I typically see a lot of people forming LLCs. This is a really nice legal entity structure because it kind of combines some good aspects of kind of all the other ones, right? So it provides limited liability protection, and it separates the owner's personal assets from the activities of the business, right? So that's a really important thing. Again, it sets up that we call it the corporate veil. So it shields the person from the business. Similar to partnership and sole proprietorship, the default taxing situation for an LLC is to be a pass-through. So it's not a separate taxing entity. So profits or losses will flow through the person's personal income tax returns. And they're really pretty easy to form, just a touch more than a sole proprietorship, but really not difficult at all to form an LLC. So what you should have for an LLC is an operational agreement. It is not required to have an operational agreement in Montana, but I would advise it. And that is just an internal document that's going to help spell out how the LLC is owned and managed. And then again, if you have multiple members, an owner of an LLC is called a member, and you can have multiple owners of one LLC. So if you do have multiple owners of one LLC, your operational agreement should denote those ownership percentages, which again could be a factor for some of those SBA certifications. I do have a link here to a downloadable template for an operational agreement. And again, not a requirement. And oftentimes, if it's a single member LLC, they don't even bother with a operational agreement. But definitely, if you've got more than one owner of an LLC, you should write up a very standard operational agreement that at the very minimum denotes ownership percentages. So now let's take a look at corporations. So obviously corporations, I saved this for last because they're the most complex, but very similar to the LLC, they're going to provide really strong liability protection for the owners. So they've set up a corporate veil there, so your personal assets are not part of the corporation. There's two types of corporations when it comes to for-profit business. We have an S Corp. These are typically for smaller businesses. You can have up to 100 shareholders with an S Corp. And then the other type is a C Corp, which you can have unlimited shareholders. C corporations, there can be some double taxation issues because C corporations, those are taxed on the profit of the business, and then also any dividends that pass through to the shareholders are taxed as well. So there can be some double taxation issues with a C Corp. Again, refer back to my second slide where it said Rich is not an accountant, because there are exceptions and nuances to all of this, but I'm just saying generally C Corps can have some double taxation issues, whereas S Corps are a pass-through. So the corporation itself does not pay taxes, but the dividends that are distributed to the shareholders in an S Corp, you pay taxes on those. So they're obviously much more complex with way more record keeping and operational requirements for a corporation. These are typically suited for, why would you do a corporation? Well, obviously you want the liability protection. So, possibly maybe a more high risk business. And then it really does help, or it can help if you're looking to raise money through issuance of stock. So that would be another reason to form a corporation. Different types of paperwork. So articles of incorporation, you got to have all the who, what, where, when, how filed with your paperwork for the business. You have to have corporate bylaws that are going to dictate the internal rules and regulations within the corporation. It's going to denote who the board of directors, officers, how the business is governed. Stock, if you're going to be issuing stock, whether physical or electronic, you have to be able to spell that stuff out through this corporate paperwork. And then another requirement might be, you've got to hold, depending on how your bylaws are set up, but organizational, operational meetings, you'll have to have minutes and record all that stuff. So just a little bit more involved on the corporate side of stuff to form that as a legal entity. Here is a quick review of kind of everything I went over today. Sole proprietorship, again, not a legal entity, but I put it up there anyway. Owned by a single person, unlimited liability. It's a pass-through entity, so there's no separate tax return, and then virtually no formal paperwork required. Partnership, 2 or more people, depending on the structure. Again, you can have unlimited liability, or if you're limited, or you might have some limited liability. It's a pass-through entity, so there's no separate taxing issues with, or no separate, it's not a separate tax entity. Sorry, the owner, the profits and loss just pass through to the owner. And then, formal partnership agreement, and you do have to file with the state on that as well. An LLC, you can have 1 or more member. Again, owners of LLCs are called members. You're not liable with an LLC. It's not a separate taxing entity, so you don't have to file a tax return for the LLC. And then again, file with the state and an optional operational agreement. And then, S Corp and C Corp, just you can see there the difference between the amount of shareholders between those two. And then the biggest difference, other than the shareholders with the S Corp and the C Corp, is how the tax works on those. Again, generally, S Corp, the taxes are passed through to the shareholders. A C Corp, the corporation pays taxes, and the dividends are paid taxes on the personal side. So possible double taxation issues with the C Corp. So you've met with your accountant or your attorney. You decided you want to form a blank type of legal entity. Where do you go? What do you do? Well, this link, you file it at the Montana Secretary of State, and there will be some forms there depending on what legal entity you want to form. For do-it-yourself stuff, if you want to do the actual paperwork on the Secretary of State website, fairly affordable, between $35 and $55. So you file with the state first, and then the next step you should do is you should get an EIN in the name of the legal entity. So after you get your legal entity formed and you know your name, then you apply for an EIN. That's a federal tax ID number for the business. So here's a really important tip, and I'm sure Shannon has pulled her hair out more than once with this issue. Make sure when you get your EIN that the spelling on your state filing matches exactly with your EIN filing. Spelling, capitalization, punctuation, spacing, everything. It can lead to lots of headaches, especially when you're dealing in the government contracting world, possibly government grant world, if your EIN does not match your business registration. So please keep that in mind when you're applying for an EIN. And again, if you go for the EIN after you register on the state side of stuff. So that is it. That's my contact information. You can reach out to me or Shannon. That QR there is a link to the Montana SBDC page. Questions. James has a question. You can unmute yourself, James.
Sorry. Yeah, I always forget how to unmute. So my question is, because my business used to be in California, we moved to Montana. So I did all the registration for my LLC in Montana. My EIN, though, I don't think we changed the address. How picky is for like government contracting if like the EIN certificate address doesn't match the LLC registration in Montana?
I don't know about the address stuff. I don't know, Shannon, if you can jump in, but I know EINs are relatively difficult to amend and change. So I don't know if Shannon, if you have any feedback on the address thing.
Yeah, so just a little bit, James, on that. There, on your IRS letter that you received, there is a 1-800 number on there that you can talk to them and see if there is a procedure that you can do to update that if you choose. But just remember, anytime that you're like if you're registering an exam, for example, there's going to be an IRS page as part of that registration process. And when you enter that information, it has to match what the IRS has on file. So it wouldn't hurt just to give them a quick call, let them know of any changes that you have and see if there's any procedures that you need to follow to get the correct answers from them. I hope that helps.
Yes,
Yeah, I guess
absolutely. Thank you.
I guess I should say maybe not difficult to amend, but I do know it's difficult to recover an EIN number. I've had a few clients who've lost their EIN, and it was almost impossible for them to recover it, and they just ended up getting a new EIN number.
Yeah, I ran into that issue as well. I just had to call like several times until I finally got somebody that say, "Oh yeah, we can do it." But everybody
Yeah.
else was telling me, yeah, that it was difficult or I had to do all this stuff. So it just
That
who you get.
Yeah, and that also keep in mind too, when I'm thinking about this, that was during COVID, during the height of everybody applying for PPP and idle loans, and probably, millions of people had issues, and maybe the IRS help numbers were swamped during that. So that could be it as well. Maybe it's not as difficult nowadays. All right, any other questions? Anybody know any good jokes? Shannon?
I don't. But if you guys do have some questions, maybe that you're just thinking about a little bit later, feel free to email Rich or I. We're happy to help you in any way. I think it's really important that we discuss this topic today because there's a lot of times when you're trying to register in these different databases and don't realize how important consistency is to be all the way through with each registration. Okay. So with that said, if there aren't any more questions or comments, then we will close out. So I would like to thank everyone for joining today's session, and a special thanks to our guest, Rich Gannon, for sharing this valuable information on entity structures today. So until next time, everyone, thank you for joining, and we'll see you later.
Thank you. You may hang up for a second, Shannon.
Yes, I want to stop the recording. I literally cannot find the stop record button here.
Maybe upper right hand, maybe I can do it.
Oh, stop recording. Here we go.